Good afternoon, everybody, and thank you very much for joining us today. Firstly, Happy New Year to everyone. I hope you all enjoyed your break, and it's great to see so many people joining us today for our first CBD session of 2026. So, just a bit of housekeeping before I hand you over. So, it'll run for approximately 1 hour, and as always, we encourage attendees to ask questions. So, please do submit them in the question function, and we'll go through them at the end. Any questions we don't get to, we will obviously review them and reply to them after the session. The CPD code is 2026 0013, and that'll be sent to all attendees once the session concludes. There is no slides today, so it will be a chat session, but we will upload the recording to our library section later on. So I'll hand you over today to our moderator, Paul Cody, founder and CEO of Compliance L&D. Thanks, Paul.
Thank you so much, Fiona, and thanks everybody for joining us. Really delighted to hold this panel, particularly with these three particular panelists. It's actually the most incestuous panel I've ever moderated on because Peter and I worked together in AIB about 20 years ago. I moved to London and Mary started working with Peter. Then I moved to New York where I worked with Louis. And when I got back from New York to work in London, I was working with Mary. So it goes to show it's a very small world in compliance and financial crime and never say anything bad about anybody, basically. Today's session, we're basically looking at sanction screening. We call it Guess Who because it kind of is like a Guess Who. We're trying to figure out who they are they a match, what the rules are, and we're trying to figure out are we dealing with the right person. And what I'm going to do today is we're going to moderate a session where we're going to look at some of the kind of the landscape and the rules and the regulations, but we're also going to go into a lot more practical depth around the practicalities of sanctions, which can often be quite challenging, particularly for smaller firms, many of whom are on the phone today or on the webinar today. Um, I'll ask everybody to introduce themselves as a panelist, but before I do, just to highlight though that for our panelists today, everything they say is it's their own views and opinions, their personal views and opinions, not necessarily those of their employers or even the Compliance Institute. And they will share their practical advice and they will talk generally about these areas, but please note they're not providing legal advice. They don't know your particular firm and your particular jurisdictions and your particular risks. So while they're talking generally about it, please don't take anything they say as legal advice. If you do need that advice, it's worth getting separately. So let me pass over, if I could. Maybe I could start with you, Mary. Perhaps you could introduce yourself and tell us a little bit about your background in sanctions.
Hi, everybody. Thank you for coming along. My name is Mary Kerwin. I'm currently an independent risk and AI advisor, particularly focused on financial crime. I've been a managing director and MLRO and head of financial crime in a number of large banks. I've also been a Canadian federal drug prosecutor, of course, now in line of sight with the US government, but mercifully, I don't do that anymore. I've also been a cyber security specialist. I've worked a lot in cyber and I've been a journalist. So I'm hoping to bring a kind of a multifaceted experience to this today. I have been in charge of sanctions for very large banks, and I've also been an advisor to very significant entities in the whole sanctions ecosystem. That's me.
Brilliant. Thank you, Mary. Peter.
I might be a bit quicker than that.
Sorry, Peter.
It's all right, Mary. I head up the sanctions compliance function in AIB, right? So I guess I'm here for the on the ground local sort of considerations. I've been undertaking that role since 2014. Prior to that, I worked in compliance with worked in compliance with payments and also another form of sanctions way back when, sort of around 2001. So it's been a while. I attend sanctions industry groups in the UK, here in Ireland, and also I go to the European Banking Federation's member of their sanctions expert group. So I think that'll do for me.
Thanks, Peter. And over to Louis.
Hi, everyone. Thanks again for having me. My name is Louis Vargas, as you know. I currently live in Copenhagen, but I'm originally from New York City. As Paul mentioned, that's where we met each other. I'm independent also at the moment, but I'm also the founder of the Network for Financial Crime Prevention, or NFCP, where we're just a community of like-minded people who are compliance officers that want to learn and grow together. I've been in the sanction space for about 11 years now. I started out in the first line. I guess we'll talk more about that in a minute. So working in first line and moved my way up into second line. And throughout the whole time, I'm always interested in finding out what's under the hood, why things happen. So that's why I'm also very interested in the technology behind what we do and how we do it. So I think that's kind of why Paul brought me here, because I have both the operational experience, but also I know a bit about the technology, and I'm just a bit crazy enough to join this call. But
It does require a certain level of crazy, Louis. But thank you so much for that. We're certainly going to come back to you on the technology and the practicality side, because I really do think that's where most people's questions are. And on the question side, please, again, just as Fiona mentioned, if you've got any questions as we go through this, pop them into the Q&A box, and I'll try and integrate them into the conversation. And anything we don't get to, Fiona will keep a log of, and we'll respond to as a group to any kind of outstanding questions people have that we don't get to in the call. So with that, I'm going to bring it back to Louis if I could. I'm going to get you to kick us off, Louis. Now, I'm conscious of the kind of the time we're in at the moment and certain recent events, but we can't really talk about international sanctions without exploring what the landscape looks like at the moment. I mean, how would you describe the international sanctions landscape at the moment and the key developments that are affecting us all?
2026 is kicking off the way 2025 ended. Still very dynamic space that we're in the sanction space. We're still dealing with the Russia-Ukraine conflict. We still, especially now in light of the U.S. Invasion of Venezuela, we still have a spotlight on China and what they're going to do about Taiwan, since that's been very well documented, that they want to take over that island as well. Again, back to the US, we're talking about recent tension between Denmark and Greenland, with the Trump administration continuing to say that they want to take over that territory for various reasons, though they put it under the guise of national security. So, from I guess a geopolitical standpoint, is still very dynamic, a lot of things in motion. And we still have to, consider Venezuela. I know for a sanctions perspective, that's mostly a U.S. concern. But now, what's going to come next? Are we going to see sanctions relief, or are they going to remain in place for some time? So that's left to be seen. But yeah, it's still very tenuous at best, and we just have to keep our fingers on the pulse of the geopolitical issues around the world to figure out, how to adjust and protect our institutions.
Absolutely. Mary, anything you would add to that as somebody who's got a significant amount of international experience as well and dealing with kind of more the senior levels of organizations, like that kind of I guess, the variables that are happening internationally, the drivers that are happening internationally is going to affect not just Irish firms, but, Irish firms who particularly have a nexus internationally. I mean, anything you would add to that, to Louis' points?
No, I think Louis spot on there, but I mean, it's incredibly important for firms with any kind of global footprint. There's numerous surveys showing now that geopolitics is number one and two on board level agendas, because both in terms of their intention to grow their business, come up with more international partners, they have to constantly watch what Louis is talking about. Like, it's moving so fast, you don't know how that's going to play out. So I think geopolitics is a huge issue, particularly for boards and senior people everywhere. And again, just to emphasize, which I know we can't get into a great length in this call, but it's not just about financial institutions. It's about everybody, and the potential for a bit of a coach and four to be driven through the EU approach to sanctions, depending on what happens in the US, I think is quite substantial, quite significant going forward. And that's certainly one to watch. Will the split become so difficult that you literally have to pick in a far more definite way than you've had to do before? Is it the US or is it your European operation? You might have to pick sides.
Yeah, absolutely. I mean, Peter, anything you'd add on those points?
I think that the word I've heard used for sanctions for this coming year is unpredictable. And I think that probably just about sums it up. It could be anything, anywhere, anytime. As both Louis and Mary have alluded to, if different authorities go down, and we'll talk about them in a minute, different authorities go down different routes at different times, etc., it can get very complex, and we will get to a situation, as Mary has sort of alluded to there, where you're sort of going, actually, it's too complicated to do the business, or we have to pick a market or pull out of it. So.
Yeah. Well, let me keep it with you if I could, Peter. So, I mean, in terms of the sanctions related authorities, the regulators, we've got the likes of the EU, we've got the UN, we've got OFAC, we've got OFSI in the UK. Like, who do we really need to care about from an Irish perspective? Because a lot of organisations I talk to in Ireland, particularly smaller ones, they're really only concerned with the EU and the UN, but they're not necessarily considering the potential extraterritorial risk. What would your thoughts be on that?
Look, I won't put words in people's mouths, Paul, but yeah, look, it is very important to consider where your risks are and what risks are out there. Okay. So obviously, as EU firms, and I don't just mean financial firms, I mean any firm, first and foremost is the EU, as you've mentioned. There's two competent authorities in Ireland that administer these sanctions, right? The Central Bank for asset freezes and some other reporting obligations on the Russian program. And then there's Department of Foreign Affairs for trade sanctions. These are typically activities such as imports or exports on goods or provision of services that are restricted, prohibited. These are not on a screenable list as such, right? If people look at sanctions quite a lot of the time, I think there's a name, I match it or I don't. There's a lot of behaviours and activities that are also restricted. Okay, so just to flag that out. You mentioned the UN. Yeah, the EU implements the UN sanctions. However, there is a time lag, so you would need to consider UN lists or sanctions. The third way I would go is if your firm is headquartered in another country, you would need to consider if home state sanctions should be screened. So if you're an Irish office of a UK organisation, for example, whether to consider looking at UK sanctions as well. And we're going to get into your extraterritoriality point in a moment, Paul. This is particularly here with the fourth one we're thinking about. We've talked a lot about the US already. So yes, US sanctions that we do need to consider. Why? Everybody goes, I don't do anything with the US. Well, this is where extraterritoriality has been in play for quite some time. And the extraterritoriality means that US sanctions will apply to any US dollar payments, any payments that go through a US person or are handled by a US person or company, wherever they're located. And we'll come back to that a little more in just a second. Some programs attract secondary sanctions. Okay, so that means that you may not be sanctioned, you may not be impacted directly by sanctions, but if you are facilitating transactions for a sanctioned person, then the US, which is mainly the OFAC, which is the Office of Foreign Asset Control, may sanction you for facilitating those transactions, right? Or you may face enforcement action of some other type of fine or a lack of access to US dollar markets and this sort of stuff. So it can be quite serious. The other thing people really look at the US for is as well, they're very heavy on their penalties. So if you go wrong with the US, it costs a lot of money. Coming back to the extraterritoriality point, so let's just explain this a little bit more, right? So the US are not alone in having this. The UK are adopting it. So you need to consider not only from the firm's point of view, but also individuals working in the firm, and whether that would affect decisions or transactions they can be involved with. So, for example, I'm a UK person working in the EU. So personally, I have to comply with both EU and UK sanctions. If there is a conflict, I might have to recuse myself from the decision being made. I hope that makes sense to people. So if the UK says you can't do something and the EU says I can, I as an individual can't, so I have to pass it off to somebody else. That's sort of a reality of what we're talking about with extraterritoriality.
And it's something that not a lot of people think very much about, but not to deviate away from sanctions, but Mary, I mean, extraterritoriality impacts things like bribery and corruption, doesn't it? Like FCPA and UK Bribery Act. I mean, how do we as organisations?
Fraud as well in the UK now, fraud is a heavy extraterritorial element.
Yeah.
Yeah.
How do we consider that? Because like from an Irish perspective, I've spoken to many firms who go, look, I don't do US dollar clearing. I don't have a US footprint. And then you say to them, well, do you have US clients or US employees? And they're like, oh, I don't really know. And you're kind of going, actually, that can create a nexus for these risk types. I mean, what advice could you give, or what advice would you ask people to consider when it comes to understanding that potential extraterritorial impact?
The UK gives quite good guidance in the context of some of those statutes that you
Mhm.
mentioned, Paul. There's a new failure to prevent fraud offence. And really, what it comes down to is back to risk assessment. You need to understand your organization. Who is it? Who are your subsidiaries? Where are your branches? Who's involved in the thing? So you can figure out the potential for extraterritoriality to bite. And then at a board level, and as Peter suggested, when people are making decisions on your behalf in your organization, if you're worried about OFAC sanctions, you can't have a US person or someone with a green card, which would be very common in Ireland, being involved in these transactions because they have personal, very significant personal criminal exposure if they're involved. You might even have to look at your payments people. You don't want a whole bunch of US citizens running, moving your money. And if it's US dollar, that can cause exposure. So it's back to risk assessment. You need to understand your environment, both from an organizational perspective, as in the map of from the legal department of what the corporate structure looks like. You need to understand the corporate structure. Where are the branches? Where are you to see in reality where this stuff may bite? And then at another level, as Peter said, a more personal level, who are the people making decisions in your organization who may have, as Peter said, they may be a UK citizen, so therefore the UK element is very relevant to them. But the more scary one, to be honest, quite frankly, is always the US element. You do not want people making very senior decisions. You may have to recuse board members in Ireland. I've had to do that many occasions where the board, realize that they have to step out of the room because they're making decisions, serious decisions with geopolitical impact around the dollar or around their US operations. So if you don't know who you are and where you are and who's in your organization, you can have very significant problems on the
Absolutely.
extraterritoriality front.
Absolutely, and it's something that's just not often thought about in a lot of firms. But Louis, if I could just to finish on this point before I move to my next one, is like looking at those regulators, whether it's UN, EU, OFSI, OFAC. I mean, how would you describe, or what kind of insight could you give us into in terms of like what their focus is, and like how likely is it that Irish firms are likely to come onto the radar of some of these regulatory authorities?
I think to summarize it quite simply, if you don't obey the rules, you're going to be in scope of that. So whether you knowingly or the competent authority thinks you should have known and haven't followed the rules, you can be in sightline to also be sanctioned yourself. Um, and I just want to quickly point out that in addition to those main sanctions lists that you have already mentioned, um, we also now have to consider the trade lists that are around. So the BIS list, which is the Bureau of Industry and Security, which is a US government agency under the Department of Commerce. And even the UK has a new agency called OTSI, so Office of Trade Sanctions Implementation. So it's becoming more complex because now there's more uh, lists that we have to be aware of, but also know what the differences between the two are. So it's no longer because in the past, even when I first started, trade lists were considered, okay, only the trade finance team cares about it. We only care about the pure sanctions list. But those days are over. And what I quickly also realized was that the trade teams also really didn't know what to fully do with those lists. We had the expectation that they should because that's their area of expertise. But unfortunately, they also were scratching their heads figuring out what to do if they saw a match to one of those lists. And the last point I'd like to make that we also need to consider is reputational risk. Well, actually, there's two more points. So one is reputational risk. So even though, let's say, Ireland doesn't have their own sovereign sanctions list, but if there are companies that are seen to be evading sanctions or dealing with sanctions parties, even though maybe they might not get in trouble within Ireland or let's say even the EU, but because they're on some other sanctions list, that will also have a detriment to their company because now they're seen as they're facilitating sanctions. And then now the last point would be there are some countries with sovereign sanctions lists within the EU. So it's not just the EU sanctions list itself. You also have to look to see if countries that you're doing business with or have employees or vendors that you work with within those countries, if they have sovereign lists, because you might have the necessity to also screen it against those lists, even though you're not, let's say, doing business there, or there's no account holding within that country. So again, there's nuances to it. We could probably talk about this all day, but just wanted to add those points.
Thank you so much, Louis. We got some really great questions coming in, really practical ones. So I want to save a few of them up because we're gonna move kind of down to the kind of the macro landscape, the international landscape, down into the practicalities. But I will bring them into play. But before I do, maybe I could go back to Mary. So Mary, from a board and senior management perspective, I mean, you've sat in front of them, you've worked with them, you've helped them kind of consider their business strategy when it comes to sanctions related risk. Like, what advice would you have for compliance officers around this call who have to sit there and, one, I guess, highlight and stress the importance of sanctions, and two, get stuff done in relation to sanctions?
I think because the environment is changing very rapidly, the potential, I would hope, for you finding a board who are disinterested in sanctions is very, very low. Right. So, and Louis alluded to the fact, although there is no OFSI and kind of civil sanctioning organization or power right now in Ireland, that does not mean that the central bank doesn't have very substantial powers under their ASP, their administrative sanctions procedures, which many people on the call will be fully aware of, in terms of, so if, notwithstanding the fact that they don't have an OFSI in Ireland, the board needs to be fully aware that when they come in and their reviews, the central bank, and you send in your filings and all the rest of it, if they find any regulatory breaches, bearing in mind that the central bank oversees the kind of regulatory regime in Ireland, and I'm talking about financial institutions here, they have the potential to portray your breach, albeit it might be predominantly sanctions, as a regulatory breach. In other words, you don't have proper policies, procedures, you don't know how to screen anything, you don't have technology to do that. You basically haven't done anything that they would expect from you in terms of having a sanctions framework, Paul. So they can fine you up to about 10 million as an organization for these breaches, and we've seen numerous fines. Under the Central Bank Act, they can fine you very substantially based on turnover, and they can fine individuals now. And I think this is a point that is quite recent in Ireland, is under the new individual accountability framework. Individuals and banks, without having to fine the institution, can be fined up to 1 million and face a lifetime ban. So if you as a board member are perceived to have had, not had your finger fully on the pulse, not being properly involved in the governance of your organization, you can find yourself individually in significant difficulty now under the Irish regime. So I think, unfortunately, you often have to start off with the big stick. It's nice to be able to say you can use a carrot, and you start off with the fuzzy stuff about, you have to do the right thing and everything. You hope your organizations care about that. But I'm inclined to point out very carefully to them that there has been changes in the environment, the new accountability regime mirroring the senior managers regime in the UK. So the jeopardy for everybody has increased exponentially, and the central bank are probably just getting their heads around it. Also on the trade stuff, the Garda Síochána have numerous investigations ongoing. I think we'll probably see criminal investigations now far more frequently than we did before. And then I think on just the final point, which Louis mentioned already, is EU sanctions have direct effect in the EU. So from the second that they pass these sanctions, they apply to you in the EU as a private firm and an individual. You don't need to have, thinking about laws in Ireland and all the rest. They have direct effect. And the Irish government are very conscious, as an open economy, that there's huge focus in Europe on sanctions, right? Particularly in the Russian context. And the Irish government do not want to be the bad apple, if you like. And you might remember, it's funny, but it's not. I'll close on this one. You might remember a few years ago, Leo Varadkar was involved because the Ukrainians shot down a drone with Made in Ireland written all over it. Now, that made front page news. So the Irish government are very, very motivated that you and I and our firms do not end up on the front page of the news as being a bad actor in terms of enforcement of sanctions. So I find by the time I've said all that, the board, if they were asleep, are now awake. And I can get very specific if I have to with numbers. But the main thing for them is, in the past, Ireland was a bit of a maybe sleepy backwater in terms of fines. I see that changing. And if it doesn't change, the IMF and the FATF and everything will come hard after Ireland as they move to ensure that the criminalisation of sanctions is much the same across Europe. So
Yeah.
I'd say it's wake up time. If you were asleep, you better not be asleep tomorrow or today, for that matter.
Absolutely. And as you've said, and has been noted earlier as well, the fines are absolutely massive. If I remember right, the BNP Paribas fine was it $8.9 billion from
Yeah.
a combination of regulators. But Peter, Mary's kind of touched on the board piece, like at the board level. But for somebody like in your role who's kind of dealing with this kind of at the senior level in terms of managing the risk and engaging with senior management, I mean, what is it you need from the board, and how do you set yourself up in terms of your framework and your program and structure to, like, if we're gonna have people on this call who are from maybe brokers, credit unions, but also from domestic banks, corporates. Like, what advice would you give people in terms of how they set themselves up from programmatically to manage these risks?
Okay, well, look, just sort of following on from what Mary said there, things are evolving, and I think that's borne out by the fact that the European Banking Authority, I think, or association, whichever they call themselves, have come out with some guidance papers on how restrictive measures, as they call it, should be managed, and the type of governance and etc. They came into effect at the end of 2025. And that's the first time that's been done, and that, for anybody that's in this space, is probably worth looking at. I think, to give you a guide or a starter. And that sort of just shows you how much more formal and how much more in the limelight in the limelight these sanctions are. So, as Mary said, getting the board's attention isn't necessarily quite so difficult as it was. Certainly, Russia has sort of moved everything out much wider. A lot more companies are having sort of essentially having sanctions impacts than had. So, look, getting back to your actual question, keywords here would be you need to know your risk exposure. You need to then look at, okay, what's appropriate and proportionate for what your risk exposure is, and that you'll probably do by completing a risk assessment. There's various factors you would need to consider there, and we've talked about a lot of them. Where you're doing business, where your customers are doing business, what business lines you're doing. Also, your customers, you need to know what your customers are doing. You need to understand who owns and controls them, what they do. So it's a KYC question at the outset. Who owns, controls your customer, because that might get them sanctioned even if they're not on the list. What do they do? So what markets are they in? Do they produce widgets? Are they a service company? What are they? Where do they provide where are their markets? Where are they selling to? Where are they providing services to? And who are they doing it with?
Okay.
Right. These are all key questions as part of your risk assessment. There's more, but look, we'll stop there. Then I think you then need to look at, okay, what sanctions are relevant to you and to the firm. And we talked about various authorities. And you could also be looking for certain business lines. You might want specialist lists for like sites of securities or military goods or those sorts of things. So you can get them from either directly from the sanctions authorities, so your OFACs or your EU or whatever. They all have listings that you can get, or you go to a reputable list provider. Okay, I would say reputable because there are a lot out there, and if you think it might cost a couple more euros, but if you've got a good name that provides that stuff, that's what I won't say you're relying on, but that's your first line of defense, really. Okay. And then if we get a bit more operational regarding screening, so for payment service providers, so that's only most of the FIs, but certainly for payment service providers to provide separate instant payments, there is a legal requirement to screen the customer base every calendar day. That's calendar day, not business day, and immediately on a change on the EU list. Okay, that's what the industry says for in the financial world. Payment transactions are screened real time generally, and they'll be on risk basis, but generally it will be your international payments. Some of those you may want to do additional due diligence on, particularly if they're going to countries with sanctions in place. Is it, again, it's about the activity as well as who you're dealing with. I think moving on from there, who or what should you screen is probably another question for people. The most straightforward answer is all the parties involved in the transaction. So for your payments, it's remitter, beneficiary, the financial institution involved. If there's any other third parties, for the benefit of or whoever, right? For trade transactions, you might add transport companies, aircraft, vessels, types of goods, or project finance is any of finance providers, etc., etc., etc. So it really is. There's lots of places where you can have the risk. Look, I say this was around the financial service part, but it may be other industries may have other guidance or minimum requirements, but you do your risk assessment, and that will help formulate what do you need to look at, where your risk is, and document it all. I would say to you, document it all, because if you end up on the end of an enforcement action, then you can at least start defending what you're doing. There's a couple of others, Paul, very quickly. Keep up to date with changes in sanctions, review circumvention typologies, review enforcement actions, see if there's any lessons you can learn out of any of them. Clear roles and responsibilities is also very helpful, and know what you need to do if you've got a true match coming through. That might be freeze the funds, and there's also reporting obligations, and validate that your processes, your framework is all working as it should do, and that includes the systems.
Yeah, I appreciate that, Peter, and you provided a perfect nexus into some of the more practical side of this. So, I'm conscious that some of these questions are coming in. So, as I kind of asked them, I'm going to delete them. So, please don't be offended if you've asked a question, but it's just so I can follow in the list here. But Louis, I'm going to fire some very practical questions over to you, if you don't mind, like a quick fire round of questions here. But we have somebody who works in a credit union, and they've been focused on UN and EU lists only. Does this mean that if we accept US, UK nationals as members being essentially their customers, that we have to screen UK, US sanctions lists? And would the same apply if they are non-ROI tax resident?
Yeah, I would say to make sure that you're safe, you should be screening against these other lists, because if you have customers that are, what we have to remember is where they're citizen or they're national, that follows them all over the world. So even though they might be sitting in front of you in Ireland, they are still a US citizen or maybe a citizen of another country, and they might be sanctioned. So that's something to really consider. And I would say that you should definitely be screening against the different lists to ensure that you have the appropriate coverage.
Yeah, and I would say to everybody as well, please remember that the person may not even know that who they are or what they are, in the sense that, I don't know, you're born in America, you're given a US passport, 6 weeks old, you move to Ireland, you've never thought about your passport again, but you could be a US national without even really realizing it. And that's got implications from a tax evasion perspective, FCPA, all those different areas. We've got another question here as well, Louis, which is, if you are an Irish firm with no US parent entity, where there is no exposure to OFAC through the currency of the transaction, is this just reportable to the CBI as the competent authority in Ireland, or should this be reported directly to OFAC?
If you have a verified match, you should still report that to the US authorities, because if they find out after the fact, they still might not find kindly to it, even if you've done the right thing with that transaction. So my recommendation is to still provide the information to them as well. And to also follow up with your local competent authority, as was mentioned in the question. That's also valid, because they also would need to be kept abreast of kind of what's happening in the region, so that they could put other things in place and provide appropriate guidance. But yeah, if it's something that's related to, even if it's a different regime, it's still valid to report it. Another thing I would say is, the US has that extraterritorial reach, as was mentioned before. So even if it's not specifically hitting the US, there might be something there that you're not even aware of. So just do your due diligence. As Peter mentioned, also make sure you have a well-documented rationale on why you're making certain assumptions, or why something a match or not, or why you're reporting or not, because the competent authorities and also your internal audit will ask for those records to ensure you're doing the right thing.
Absolutely. One more question for you, Louis, and then I want to go to Mary on regulators. But a majority of companies use US tech, like Office 365. That surely puts the majority of Irish organizations in scope. Now, I guess that's a question around like how strong does the nexus have to be for extraterritorial risk to apply?
Goods, people. I mean, I think that's why also the EU is looking for, especially in the AI race, they're looking for local companies to like that they can rely on, just in case there are issues within the US that they have to start pulling away from the US infrastructure. For so many years now, you've seen where, the world just relies on whoever they deem is the best in what that is. So I'm not saying that the US technology scene or the players there are the best. I'm just saying they figured, okay, why invest in these goods or these products or services when it's already built out for us in the US. And the first holes we saw in that was, during the GDPR issue with Schrems 2, where, now we had to worry about what providers we had and where the data was being held, because there might be certain restrictions. And I think now with the current world we live in, it does make sense to kind of have a sight on, and as I mentioned earlier, the vendors you deal with. So it doesn't even have to be Microsoft. It could be anything. If you have a nexus to, a different jurisdiction, you have to keep that into account when you're doing your due diligence.
But thinking very practically though, Louis, like I mean, if I'm logging into my computer and I'm working on using Office 365, does that create a nexus? Does that mean that I don't know, the file I'm working on, the client, the deal, the transaction, that suddenly got an access to the US just simply because I'm using US software?
No, I don't think so.
No, I don't think that's the case. I think it's mostly if hmm, yeah, I mean, I don't think legally speaking, as Mary was going to point out, it's specifically where you have to uh, you know, flag something for that reason. But
Yeah.
I think I guess what I'm getting at is more on the kind of trade compliance side, is where if, let's say you build this computer, right? Or I'll give you a more practical term. Tesla, everybody knows the automobile company Tesla. They use batteries in their cars. Why? Because they're electric. And at one point, they were sourcing batteries from Panasonic, but out of Canada. And they thought that was fine. Canada, there's no issues there. But once they purchased those batteries, they found that there was a component within the battery, cobalt, that was sourced from Cuba. They had issues with OFAC because of that. So in that regard, I'm saying you have to be more diligent on, where you're sourcing goods from because of that potential nexus. But as far as, yeah, I guess the specific example given, no, you wouldn't have to go that far.
Absolutely. So
Sorry,
thank you for
Paul.
that, Louis.
Sorry, Paul. Could I
Yeah.
come in on that just one second? I think
Mm,
we're straining into export controls as well there, as Louis mentioned before,
mm.
right? So with BIS and whatever, and knowing about those. The other thing is that you could find yourself in one or two problems if you're in one or two of the comprehensively sanctioned countries and trying to access accounts from there. Iran being one, sort of, is probably the main one people will know. So you might find that your banks or your software won't work in those countries, right? Because they may put IP blocks on them and this sort of stuff. So just throw that one in.
So which is exactly the point that Louis is making. Yeah, it's the purchase of that stuff. Then it won't be able to get in. But thanks for that, Peter. But just jumping to Mary, just very quickly on from a regulatory perspective, like what are the regulators' expectations, CBI or more broadly, around like how firms manage sanctions? And I'm going to tie that as well to a question we've got, which is what change do you expect AMLA is going to bring to sanctions compliance? Um,
Yeah, well, there was a spat initially as to whether AMLA should have anything to do with sanctions because they already have so much to do. I think they need another 7,000 people. So it's kind of watch this spot to see what AMLA is actually physically able to take on. But I think to the original point, Peter made a good point about, the EBA have now stepped into the frame a bit. in terms of the restrictive measures guidance, which is the first time we've had a kind of an EU level view. It's important to note that that guidance, the various member states had to indicate back to the Commission whether they intended to comply with it or to use it. And in July of last year, the CBI came back and they said they would. So if the CBI come in and do a review of you, you know, and your general framework around AML or whatever, and they always take a look at sanctions, they will certainly be keeping it in mind what it is that these new guidance have to say. Now, having had a look at them in detail, there's not a huge amount different than Peter and I, you know, would be used to be seeing in Ireland more generally. The CBI tend to be pretty tough on the sanctions front. They expect you to have a kind of a rigorous attention to detail in terms of setting out your framework. And I think if you take it from the top, because I know there's people in small firms as well on the phone, it goes without saying that you have to have a sanctions policy. Like sometimes I've been actually devastated to find out when I went in to give what I thought was fascinating advice to discover there was no sanctions policy, or it was absolutely abysmal. And from then the expectation is you have procedures and even standards, you know. So what I'd say to people is, in a very large bank, you'll have 200 pages of sanctions, procedures, or standards, depending on how you want to call what you want to call it. And that'll be literally setting out what Peter said. If A happens, B does this, or this, you know, it'll set out in minute detail the technology you use, when you use it, as Peter said, what the obligation is, when to screen, who does what. If you're in a very small firm, they don't expect you to have 200 pages. What they do expect is for you to have a document outlining who does what and when, and what the expectation is, and a very clear indication, preferably in board minutes, that the board has signed off on the policy, just so every year it's renewed, and any significant changes that Peter brings them and says, look, because of this change, we got to do this, that, and the other, they formally sign off on it. So no matter how small you are and you have a board, you better be able to assure the CBI that this has been discussed at board level, that they signed off on the policy, and whatever you call your procedures, and as Peter says, that has to be in writing. And the CBI are tough, and they're very well informed. My experience with them is very good in the sense that they ask intelligent questions. They know exactly what it is that you're supposed to be doing and what you're not doing. They're very informed from their dealings with their colleagues around in Europe. So the excuse, I'm very small and I don't have the bodies, is going to kill you dead, right? So we've seen fines across Europe from EU regulators as well. Now, the fines are increasing massively around Europe. So there's guidance in the guidelines, as Peter said, around, you know, what the expectation is. There's numerous guidance from OFSI that I think is very good. If you really don't know much about it and you need to start from scratch, I'd read the documents OFSI have produced, and on the trade side as well. And the CBI have, you know, if you look at their fines, you'll see their expectation, you know, and when looking at emerging risk, I think Peter or Louis said, you got to keep an eye on what's coming down. You got to be able to evidence that you're on it. So from the very most basic level, tone from the top, do the board care, and how do you evidence that they care? Do they sign off on your policy? Where does it say that they have to sign off on your policy? You need to have the basics on the page, because if it's not there, it doesn't exist.
But let me address two questions, if I could, Mary, that actually tie exactly to what you're talking about. So somebody has asked, does every regulated firm need a sanctions policy? For instance, does a health insurance company need one, as health insurance legislation says that you cannot refuse cover?
I think in the current environment, because of the restrictive measures being directly binding, you need to have a stab at having something on the page somewhere. You want to call it something else, fair enough, but you better have something that reflects that you care about this, because these measures, as I said, are directly binding on you, whether you're a private firm, whether you're in healthcare, whether you're in fashion, whatever you're in, whether you're Primark, Pennies, Dunnes, or whoever you are. You better show that you're paying some attention to this thing. So I think it's not so much around the nomenclature. The rules that I'm talking about particularly relate to financial services. Mm-hmm. But from your risk assessment, if you decide your risks are X, Y, and Z, if you think that you're not in scope, as that person whose concern is around health, if you think I'm not in scope, have it on the page somewhere as to why you're not in scope, in which case you don't need to do X, Y, and Z. And maybe you say your policy is a half page, you've put another title on it, whatever. But the really prescriptive rules are for financial services firms. That's where we're predominantly talking about here with the EBA and the guidance that, you know, particularly here that are talking about. But I think more generally, because the criminal penalties exist out there, you got to be able to demonstrate that you know a bit about this and you know what you're at. That would be
Absolutely.
the way I'd answer.
For me, I think you're right, Mary. You have to demonstrate it's been considered and why you are not going to, what your risk appetite is effectively here, right? My risk appetite is I have to take everything in. So, whatever that. So you're justifying why you're doing what you're doing. Just the other guidance that was out was for EU operators from the European Commission. That was aimed at enhanced due diligence to shield against sanction circumvention, but it's another one. It's not aimed at. It's actually aimed at every other industry other than financial services, right? Yes. So there's a lot of guidance out there for people.
Yeah, and I love the point that Mary, Peter, Mary, I love the point that you make around the policy, because even if you don't feel it applies to you, you've got to document why it doesn't apply. The only thing worse than actually not having the right answer or not following the right process is not even realizing that you needed one in the first place, or that you needed to have something there in place.
What I found with CBI, because I have a great deal of respect for them, is that they're very logical and rational. So if you can look them in the eye, which I've unhappily had to do on occasion, and say, well, I don't think this risk is terribly pertinent to me, it becomes, you're like the child who's saying, you say the sky is blue. Why? Why? So when I've exhausted the whys and I can sit back and have a cup of tea, I feel that I'm able to have a conversation with the CBI.
Yeah.
If I'm left with oh God, I don't really know the answer to that, and I certainly couldn't prove it if I was asked, then I know I've got a world of work to do. So be rational in terms of what it is you say. As Peter said, if you think this doesn't apply to me because of X, Y, and Z, you better be able to evidence that decision, and you better be able to show that the board, if it's very significant, is fully aware and fully in agreement with your assessment, that you didn't go off on a frolic all on your own on a Friday afternoon and make a very significant decision that the board is never aware of, because then you get the worst possible fine from the CBI, which is a governance and board failure fine.
Yeah.
Which is where you do not want to be.
Yeah, and Mary, we have a question here, which you kind of addressed in large parts, because you talked about policy and you talked about standards and processes and all the rest. But somebody was asking about what would be the difference if the CBI is doing thematic checks around sanctions compliance in the industry? What would be the difference? And would there be a key thing that you would call it as being the main difference between a sanctions review from the CBI or the regulator versus a traditional AML review or audit? Would there be any material differences between them?
There's a crossover, clearly, and anybody who does sanctions well has AML at the back of their mind at all times. Like if you're in a large bank and you're running your sanctions squash, you've always got AML risk at the back of your head, right? Because it may flag up an AML risk that you hadn't really thought about, particularly in the trade sense. I can think of many occasion where you do an investigation on something and you discovered, my God, there's actually a major organized crime operation potentially behind this, or there's drugs, or there's something else, as well as them being potentially on a sanctions list, which is becoming more common now, but the crossover between AML and sanctions is very obvious. And as Peter pointed out, if you don't know your KYC and your ongoing due diligence, you're dead in the water to start with, right? So the whole basis and the foundation on which you build a sanctions framework is your AML and your overall financial crime framework. So you kind of can't say they're coming in on sanctions review, so really I don't have to worry about the rest of it. It's actually the worst of all reviews, in that you kind of have to think about, how do we do everything here that may cross over into the space? Because if I don't know the customer, which is the key AML driver, then I can't look the CBI in the eye and say, I've got a great sanctions framework, because clearly you don't. So the crossovers are continuous and becoming thicker, particularly you see more designations now that are stretching the boundaries of traditional sanctions, with cyber, with terrorism related. You see that happening a lot in the US. So I would say, particularly with the CBI, very focused, have a lot of experience, can send in good people. Sometimes they'll supplement their teams with experts. They know their payments. Peter's a payments expert too. So it's very helpful to have payments people. I would suggest that you need to have spoken to your payments teams to know exactly what's going on there, because you can get a kind of quite a surprise if you don't actually know, your payments architecture and how things are working there. So I would say you really, particularly on the KYC side, you need to have a very solid understanding of where your vulnerabilities are in your risk assessment on AML. And you need to be able to point out that you have done a sanctions risk assessment, whether it's part of it or is it separate.
Yeah, and as you and I were talking about recently, is we got to remember as well that why is somebody even on the sanctions list in the first place? They may be involved in terrorist financing, criminal activity. That also provides the nexus into AML. But just if I could jump to Peter, and Peter, just briefly on the technology and the infrastructure side, you've summarized very clearly like the framework, the risk assessment. We've talked about the policy, we've talked about the process and the senior management and so on. But when we're going to have people on this call who are from big firms, small firms, all sorts of sizes. Like, what kind of typical technology and infrastructure should they have in place to manage sanctions-related risk?
I think it's difficult to say there is a typical one, right? But I think if you look at if you talk about this, is conversations basically about sanction screening. So if you're screening, you probably nowadays need a system because the sanctions lists are that long, etc. The only time you might not is if you have got a very static customer base, and there's not many of them. You may be offering one or two, I don't know, investment funds, and there's 3 or 4 investors in these funds. They stay static. You can possibly then do this a little less frequently. You could sign up to something, I don't know, one of the list providers that provide you a web portal instead of getting lists and stuff. So you could try doing that. I'm not sure I would recommend it even in that case, but and there are technologies that will give you some moon and stars. So if you're looking at that, well, what do you want it to do? What do you need it to do? And maybe a bit of future proofing. You don't necessarily always need sun, moon, and stars here, right? If you're in a small firm with a limited international exposure, whatever, you get to possibly a lower sanctions risk exposure. Again, it's about proportionate and appropriate.
Yeah.
So there may be different options here. You can go out and spend millions, or maybe it's not quite so much.
We've got a number of people who are asking for recommendations around sanction screening tools and solutions. I certainly wouldn't recommend any. I mean, I'm over to you, but I mean,
I haven't got any sponsorship from any of them. So a bit more serious. It will really depend on what your risk assessment shows you need. What you go and look at your business and stuff and whatever else. There are systems that are better at trade finance screening, for example, than others maybe, or security screening or whatever. So there's lots of people out there. I would look for ones that probably you've heard of initially, but you've also got a lot of companies are coming in with we've got AI, we've got this, we've got everything else, all singing or dancing. I would look to really have a go at them and say, this is what I want. Does it do it? And you get into the detail of, well, I need to know that this is a problem, and I need it to do this, and I need it to then format me a report or whatever it is, and get the system to do as much as you can. If they've given all these AI agents and everything else,
and that provides a very natural kind of nexus to my next question. Actually, over to you, Louis, if you don't mind, is like, how do we manage? And this is probably the biggest question people on this call will have. How do we manage the practical challenges of sanction screening and hits and escalations? So how do we know we've got the right person? How do we know that this is our guy? This is our guess who? You and I are playing guess who now. We're flicking over the tiles. Like, how do we figure out whether or not we got the right person? And how do we manage that? The practical challenges of that.
Yeah, I guess to break it down fundamentally is, whatever the system or your filter spits out as a potential match, that's looked at by what's considered the first line or first level, I should say, first level screening. And first level usually sits within the first line or business area. And usually, generally speaking, they do no research. They just look at what's in the screen and they make a decision whether it appears to be an accurate match or not. Because even though technology is as good as it is, it still can't predict 100% if there's a match or not. So let's say the first level analyst looks at it. They could say they see it's a clear mismatch. They release it. They let it go. The payment goes through. If they cannot make a decision, they have to escalate it to level two. Level two takes a closer look at it. They do some research. They could also send out a request for information or an RFI to get more data back to then make a decision. Now, if they can't make a decision, or if it appears to be a true match, then it usually goes to 2.5 or a third level review. Sometimes that sits also within the first line of defense, the business area. In the US, sometimes it looks like so far right now, it sits within compliance in the second line. Again, we take a look at it holistically and try to make a decision. Why I say the US is a bit different, because in the US, those compliance teams that sit within the third level screening units, they make a decision on it and they say whether it's yes, a match, or no. In what I've seen more in Europe is that the three lines of defense are a bit more defined. So let's say it does come to the compliance unit, they would make it, they would advise the business area to say, based on what we see, this is what you should do. First line still owns the response. So that's generally how it's handled. And now if it's this appears to be a true match, then the compliance will have to handle it and do whatever reporting is required, or request any freezing of assets or stuff like that.
So
So
handling
that's
the handling the escalation stuff. But Louis,
yeah.
what if you've got like somebody who's doing sanctions, but they're also doing AML and CFT and compliance and risk, and they wear all hats? Like, I mean, do you think all that can be condensed and packed into a single process or a single kind of approach for somebody maybe with less resources or capability?
Yeah, I mean, I definitely can. I think that's also where I see we're going, even for bigger institutions where they have to be trained in the different areas, and the way also technology is kind of laying out, where now we could see a dashboard to the holistic risk of compliance, or holistic picture of what compliant customers' compliance risk might have for institution. So I think we're going to start to see more of that. But yes, for a smaller institution, you can wear many hats. But I think you just have to be careful on maintaining the three lines of defense model. Well, in this case, more the first line and the second line is the most important. And just ensure, again, what was highlighted earlier is that you have the right rationale in place to ensure that whoever looks at this after you, because of course, as you're running through all these alerts, you're not going to remember what you did the alert before, or even two alerts before. So rationale is key, because when it's reviewed later, what you could have done the right thing, or I'm not trying to say that it gets reviewed because something was wrong, but when it gets reviewed later, it has to be clear why you've made that decision.
You need the audit trail, and not just
Exactly.
to say this is why I let it go, but also this is why I didn't let it go. You need to cover both
Exactly.
sides. But Mary, you and I were chatting there very recently, and I mean, what were the kind of you highlighted some of the practical questions you would ask if you're not sure that Louis Vargas is Louis Vargas, recognizing that Louis got a US passport and he's got a whole bunch of risk as a result. But if we're not sure Louis Vargas is Louis Vargas, what kind of questions would you ask?
Well, I mean, you have to look at what the listing says. So usually they'll give you some information. So you might have a date of birth, you might have a place of birth, you'll have some other information in the listing. And if your customer is 75 and the guy is in Syria and he appears to be 25, well, that gets a fair hint to you it's not the same person. So sometimes you'll have to go back out to figure out ways that you can differentiate and distinguish a true match from the. So you look at the information that's provided in the listing and use that to distinguish. But I think to go back to what Louis said there, though, just because my heart goes out to the person on their own trying to do everything. And I kind of want to focus that for a minute. Whether they can do it on their own and whether they should do it on their own is more my concern. If it's a tiny firm, like Peter said, or not a tiny firm, but has a very static book and nothing happens much, I have no problem with one person sitting there trying to do it. If this is actually quite a large organization, which I've seen, and one person has been tasked with doing the work of a genius or of a superhero, the firm actually has a serious problem because they will not be able to manage the volumes and the complexity of the organization. And they need to have the guts to go up the line and say, I don't have what I need to do this job. So I think it's not a question of can one person there figure out a way to what it's doing. Is it appropriate in light of your risk assessment and who and what you are and where you're doing it. So don't feel that you have to be some hero sitting alone if your volumes are actually high. Right? You're setting yourself up to fail and the whole organization to fail if that's your daily reality.
Yeah, and going back to your earlier point, that's where you need to be bringing those stats to the board and saying, look, this is the volume we were dealing with now. This is the volume we're dealing with. Like that tells us something. I'm conscious that there's still a lot of questions in there we haven't gotten to, and apologies for that. But Fiona is going to do a grab of all these questions, and we'll try to respond to them. If there's anonymous there, maybe what we could do, Fiona, is just send out a general kind of response to all the questions to all the attendees, and they can see the collective responses. We've run out of time. It's been a really interesting session. Do you know what? I genuinely think we could talk about this all day, literally all day. I hope people have found this session useful. If needs be, perhaps we can pick it up again later in the year and talk about it again in a bit more detail. But a huge thanks to our panel for coming along. Thanks to Louis, Peter, and Mary, to Fiona for hosting us, and to the Compliance Institute for running this event, and to all of you for attending. A huge thanks for your time, and we look forward to hopefully seeing you again soon on another webinar.
Thanks, everybody. Bye-bye.
Thanks, everybody. Bye-bye.
Yes.